Welcome to the Radio Revenue Podcast.
Today, we're plunging into, well, one of those dynamic sectors going, the crypto asset market.
Absolutely. It's moving so fast.
It really is. It's buzzing with innovation, big shifts. So our mission today is really to distill the key takeaways from our sources, give you a shortcut to understanding where things stand in 2025.
That's right. And what's fascinating, I think, is just how quickly the whole financial ecosystem is reconfiguring itself.
Reconfiguring, yeah.
Our sources are indicating that, with large-scale adoption, we could see pretty much all money and contracts migrating onto public blockchains.
All of it. Wow.
Potentially. It's a fundamental shift. It enables and verifies digital scarcity, proof of ownership, things we couldn't really do before, not like this. Increases transparency, collapses contract costs.
Okay, let's just back up for a second. When we say crypto, it's more than just like digital cash, right? What are the core ideas driving this reconfiguration you mentioned?
Good question. At its heart, yeah, we're talking about digital assets and the distributed ledgers they live on. That's foundational.
Okay.
Beyond that, key concepts are, well, cryptocurrencies themselves, obviously, the blockchain tech underneath it all. Then there's the whole world of DeFi, decentralized finance,
Right.
and crucially, stablecoins. They're sort of the bridge between traditional finance, the old world, and this new crypto ecosystem. We'll definitely unpack how those pieces fit together.
Okay, great. So let's set the scene. Looking back a bit to look forward. What were the really key market indicators, the dynamics that defined 2024 and are now shaping 2025?
Well, 2024 was undeniably a transformative year, especially for certain assets.
Which ones?
If you connect it to the bigger picture, Solana's SOL token, for example, it appreciated, around 120% year to date. Its market cap relative to Ethereum jumped from maybe 16% to over 25% by year end. Pretty significant.
That's a big shift in relative value.
It is, but maybe the most profound thing was Bitcoin. It hit a huge milestone, actually flipped silver to become the world's 8th most valuable asset.
8th, ahead of silver.
Exactly. And this wasn't just, numbers going up. It was largely driven by those big ETF inflows we saw. That signals a real shift in how institutional capital sees Bitcoin.
So not just speculative anymore.
Less so, definitely. It's moving towards being seen as a legitimate, top-tier store of value, directly challenging things like gold, silver, the traditional safe havens.
That is a powerful statement. Okay, so beyond Bitcoin and Solana, what about other parts of the crypto market, like emerging sectors? How did their market caps change?
Yeah, we saw some really substantial growth there, too. Explosive, even in some cases.
For sure.
Take AI-related protocols. Their total market cap surged from, maybe $5 billion in October 2023 to over $60 billion by early December 2024.
$60 billion. That's incredible growth.
It is. And it's not just hype or a hot narrative, as they say. It reflects, I think, a fundamental belief in the synergy between these decentralized networks and AI compute power.
Interesting.
And then there are stablecoins. Volumes just hit record highs in December 2024. Daily volume reaching $270 billion. Monthly, $2.7 trillion.
Wow. What's driving that stablecoin volume?
It's happening across multiple chains: Solana, Tron, Ethereum, Base. They were the leading networks. It really shows a growing utility for stable assets across different ecosystems, not just for trading, but potentially for payments, DeFi.
Okay, so that sets the stage. Looking ahead now into 2025 seems like it's being shaped by some major trends. Let's start with regulation. That's always the big question mark, isn't it?
Always.
What new laws, what changes are we seeing, especially around stablecoins, that might finally bring some clarity?
Yeah, 2024 really felt like a turning point for crypto policy. It set a transformative stage for 2025. We saw quite a dramatic shift, actually, with the Trump administration adopting a decidedly pro-crypto stance.
Right, that was noticeable.
That's fueled expectations for a more favorable regulatory environment overall. The feeling is that lasting clarity is more likely to come from Congress now, rather than just the SEC acting alone.
And specific legislation.
Yeah, FIT 21, that comprehensive market structure bill.
Right.
It aims to clarify, which assets fall under which agency. That passed the House with bipartisan support, which is significant.
Bipartisan, okay.
And the Clarity for Payment Stablecoins Act also moved forward. That's crucial, given the volumes we just talked about.
Yeah.
And globally, don't forget MiCA, the EU's markets in crypto assets regulation. That's providing a lot of clarity across Europe.
Okay, quite a bit happening on the legislative front. Beyond those specific bills, though, what were the sort of broader themes affecting policy? Maybe things subtly shaping that stablecoin market, too?
Well, several things come to mind. There's a growing emphasis on self-custody rights, the idea that you should be able to hold your own keys, control your own assets.
Right, not your keys, not your coins.
Exactly. Then there are these ongoing concerns about things like Operation Choke Point 2.0. That's the perception, anyway, that regulators might be pressuring banks to cut off crypto firms. The whole debate around privacy tech versus combating illicit finance, that's still very prominent. Same for Bitcoin mining and energy use.
Still big topics.
Definitely. And it's worth noting, crypto lobbying just exploded in 2024. Estimated $200 million spent. That puts the sector among the top 5 lobbying spenders in D.C.
200 million. Wow. They're playing seriously now.
They really are. It shows how much is at stake for the industry's future.
So, okay, regulation is moving, maybe clarifying things, but it feels like it's the institutional money, the big players, that's really validating this shift. Can you talk more about that? How are institutions and ETFs embracing digital assets?
Yeah, the data here is pretty compelling. Our sources show 86% of surveyed institutional investors either already have exposure or plan to allocate in 2025.
86%, that's huge.
It is. And get this, 59% plan to allocate over 5% of their assets under management to crypto. That's not just dipping a toe in.
No, that's a serious allocation.
Exactly. And the Bitcoin ETFs, as we said, inflows largely beat expectations, big signal of acceptance. Ethereum spot ETFs got approved in July 24. Their flows were a bit lower than Bitcoin's initially, but interest seems to be picking up there too.
And the big TradFi names.
They're all in, or getting in deeper. JP Morgan, Goldman Sachs, Robinhood, Revolut, expanding their crypto offerings. And you had Stripe making that huge $1.1 billion acquisition of a stablecoin firm. That's not just participation, it's like deep integration happening.
Okay, integration. So what about DeFi and this idea of tokenizing real-world assets? Is that where we see blockchain moving beyond just speculation into, tangible impact?
Absolutely, I think so. The percentage of firms actually engaging with DeFi, it's projected to triple in the next 2 years, from about 24% to 75%.
75%.
Yeah.
That signals a real move towards using decentralized protocols for actual financial services. And at the same time, 76% of firms plan to invest in some form of tokenized asset by 2026.
Why? What's the driver there?
Primarily portfolio diversification, it seems. But things like tokenized treasuries have been really key. They bridge TradFi and crypto, offering decent yields by putting real-world assets onto the blockchain.
Right, bringing T-bills onto the chain. Exactly. And there's growing interest in tokenized private credit, too, looking for higher yields. So yeah, we're seeing real economic activity being built on these blockchain rails now.
Okay, let's shift gears slightly. The other massive force here is artificial intelligence, AI. How is that impacting crypto? And what challenges does it bring?
Right. AI x crypto, definitely one of the hottest narratives of 2024, attracted over $1 billion in private investment, as you mentioned.
So what's the core idea?
The fundamental idea is around AI agents. These are autonomous programs doing tasks for users. They're expected to really accelerate the adoption of digital apps.
And we're seeing real examples already.
We are, yeah, some fascinating ones, like AI creating its own religion, or meme coins like Gotius Maximus.
Wait, an AI created a meme coin?
Yeah, apparently the AI designed it, deployed the tokens, generated the art, the whole thing, and agents that deploy their own tokens. Plus, you have decentralized compute networks emerging like Akash, IO.net. They provide GPU power for training AI models.
So decentralizing the AI infrastructure itself.
Exactly. And platforms like Bitensor are facilitating decentralized AI model development, sort of collaborative intelligence. It's a really dynamic space.
The potential seems huge, right? Automating knowledge work, drug discovery. But with all this speed, what are the risks, particularly for crypto market participants?
Yeah, despite all the optimism, challenges definitely remain. Top concerns from investors. Still, regulatory uncertainty, number one. Market volatility, that's always there in crypto. And security of custodying assets.
Custody, right?
Plus, this push into digital assets brings renewed focus on, illicit activity, money laundering. So you see things like the Genius Act exploring new ways for financial institutions to detect and prevent that kind of misuse. It's this constant balancing act, really. Innovation versus security and compliance.
Okay. So balancing those challenges, what are the main things that are really poised to drive market growth in 2025 and beyond? What are the key factors?
Well, first, continued progress on regulation in the US and EU. That's crucial. A generally pro-crypto administration, plus those bipartisan efforts like FAT 21, the Genius Act. Getting clear, supportive rules in place reduces risk, encourages more players to come in.
Makes sense. Regulation first.
Second, just continuing to attract that institutional capital, launching new investment tools like the Bitcoin and Ether ETFs. Those bring in significant money and, just as importantly, legitimize the space for mainstream finance.
So policy and capital. What about the tech itself? How do AI and blockchain scaling push things forward?
Yeah, this is where it gets really exciting, the tech convergence. On the AI side, computational performance is just accelerating like crazy. Some sources talk about approaching the end of the chessboard by 2030.
The end of the chessboard. What does that mean?
It's an analogy for exponential growth. Think of Moore's law, but maybe even faster. Doubling, 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 64 times. It suggests this incredible surge in AI capabilities is coming, automating huge amounts of knowledge work, creating trillions in value. Potentially. Look at drug discovery. AI systems like AlphaFold, these self-driving labs. They're already collapsing costs and timelines. It could totally transform cancer care, rare disease treatments.
That's profound. And what about blockchain tech itself? The scaling and security issues that have always been there.
Yeah, big strides are being made. Ethereum's layer 2 solutions, they've already scaled throughput by something like 15 times, up to maybe 200 transactions per second. Solana consistently does much better, averaged around 800 DPS.
So getting faster.
Definitely. But maybe the most revolutionary thing is ZK Tech, zero-knowledge proofs.
Right, ZK. Heard a lot about that.
It allows you to prove something is true without revealing the underlying data.
Yeah.
It's really on the verge of exponential growth, and it could totally change scalability, privacy, interoperability across the whole blockchain landscape. And then you combine that with other tech like humanoid robots, advanced 3D printing, reusable rockets. It all starts collapsing costs across manufacturing, transport. This creates efficiency that fuels growth and demand for the underlying digital infrastructure, like blockchain.
It's all interconnected. You mentioned infrastructure, and AI needs a ton of power. What about energy? How does that fit in, and how does crypto connect?
Energy is absolutely critical. AI data centers need huge amounts of power, and that demand is growing fast.
Right.
You see, regulatory changes around energy can have a big impact. Think about U.S. electricity prices after '74. And now there's this surging interest in nuclear energy. It's clean, reliable. You've got Microsoft, Google, Amazon making deals to secure nuclear power.
For their data centers.
Exactly. We're also seeing growth in solar, wind, battery storage. And interestingly, Bitcoin mining is sometimes getting integrated with renewables to help balance the grid, use excess power.
So crypto isn't just financial, it's becoming part of the energy infrastructure conversation too.
It seems to be, yeah. It's another point of convergence.
Okay, so looking ahead then, with all this interconnected innovation, what are the main uncertainties that still linger? And what are the longer-term prospects?
Well, despite the optimism, which is high, those regulatory uncertainties are still a risk. You can't rule out a reversal in sentiment towards crypto or just legislative gridlock. That's always possible.
Right, politics can change.
Exactly. But honestly, when you weigh that against the sheer scale of opportunity from these converging technologies, AI, blockchain, multi-omics, robotics, the opportunities seem to far outweigh the risks. This convergence looks set to redefine pretty much every economic sector.
Redefine everything. So bringing it back to digital assets, what does this mean for something like Bitcoin? And how should maybe our listener be thinking about this future?
Well, Bitcoin seems firmly on that path to becoming a major store of value. The ETF flows becoming the 8th most valuable asset. That points strongly in that direction. More broadly, some sources suggest disruptive innovation, this whole cluster of technologies, could grow to command maybe 2/3 of the entire global equity market by 2030, compounding at like 38% annually.
2/3, it's staggering.
It is. The future we're heading towards is one where, personalized AI agents might do your shopping, multi-cancer screening is routine, autonomous vehicles handle transport and logistics. The scale of change is just profound. It changes how we live, work, interact. So maybe the question for you listening is, how do you prepare for that kind of world? A world mediated by AI, with routine advanced health screening, autonomous everything. How does that change your daily life, your work?
That's a powerful thought to end on. What an incredible, comprehensive deep dive. We've really seen how 2024 set the stage, a truly transformational year, leading towards potentially unprecedented growth and integration for digital assets.
Indeed. The big challenges now are navigating that regulatory path, getting the clarity needed, and harnessing all this converging tech, AI, blockchain, robotics responsibly. But the opportunities for innovators, builders, market participants, they're just immense, reshaping industries. It's quite a time.
It certainly is. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated